Hi everybody and welcome back to Capital Rev. Really? I missed you too. Today I want to talk about gold, specifically gold's role as an inflation hedge or lack thereof. The more you pay for any asset, including gold, the lower your subsequent returns are going to be. That's just sort of an economic reality. If you question in any way my truth or disagree with it, you're obviously some kind of anti-Canadian bigot and should therefore be shunned and lose all your friends. If someone says to you, there's massive money printing out there right now, look into it, because it actually may not be the case that there's massive money printing. There actually may just be massive increases in bank reserves. The giant retina scalding light that's in my face right now, I would recommend anything with Jussie Smollett in it. Question the premise undergirding every thing you hear from an investment advisor. Anything with Brie Larson. She's a great actor. Everyone I know, when they think gold bug, they think sane. In case you're not the single person on planet Earth who watched my 4-part series on gold 7 years and maybe 24 pounds ago, I'll just refresh your memory that I said back then that gold was probably going to be a terrible investment going forward for the next several years, and it turns out that that was correct. And the reason simply was that gold had had such a spectacular run to that point that it was probably going to actually peter out, because we know as good investors that the more you pay for any asset, including gold, the lower your subsequent returns are going to be. That's just sort of an economic reality. And it turns out that that was actually true until about September of 2019 when gold started to take off again. And the other thing that I pointed out in that video is that gold is actually not a great inflation hedge. And I made that observation based on the research of Erb and Harvey in their seminal work. So I want to refresh that thesis today, talking about specifically about gold as an inflation hedge, because there are many people, including many smart people actually, who are suggesting that gold is a great hedge against inflation, and I think that view is mistaken. Before getting into it though, there's two things I want to say. The first is that I know many of you watching this are gold bugs yourselves. You are yourselves gold bugs. And as a result of that, you're some of the most mature and well-balanced and reasonable people on the internet today. And so I'm expecting in the comments below reasonable and well-balanced commentary, because everyone I know, when they think gold bug, they think sane. Second thing is, I have to confess that I'm a child of the 80s, which means in part that I was weaned on some really, really cheesy music, including this. A consequence of that is that many of the times that I think about gold, write about gold, talk about gold, I've got that going through my head. So it's actually causing me some pain to talk to you about this, because I'm reliving that music. You don't have to thank me. Not every hero wears a cape. Just know that I'm making a sacrifice for you, dear viewers. Finally, what I want to say is that when I'm talking about gold and I present my arguments, I'm speaking my truth. And in keeping with the times in which we live, if you question in any way my truth or disagree with it, you're obviously some kind of anti-Canadian bigot and should therefore be shunned and probably fired from your job and lose all your friends. Let's start by looking at gold as an inflation hedge. So an interesting thing about me is that I like to run statistical analyses on every idea I come across and be very skeptical of any new idea and question everything, which is why my social life is in the state that it's in. In keeping with this behavioral tick of mine, I decided to actually look at the graph of a government bond and the price of gold. The reason being that these two things should not move in tandem. They should actually move quite opposite from each other, depending on whether expectations about inflation were high or deflation were high, right? So in a high inflationary environment, obviously a long-dated bond, government bond, would actually be very, very unattractive, because when you finally get your money repaid to you in 25 years or 30 years, you're going to be receiving the same amount of dollars, but they will have much less purchasing power in a high inflation environment. So bonds are going to be very, very unattractive when inflation is high. And gold, conversely, in that environment should actually do well if it is, in fact, a hedge against inflation. Conversely, if it's a deflationary environment, you would think that bonds would do really, really well, because you're going to be paid back with dollars that have greater purchasing power. So the idea is that gold and bonds should always sort of move counter to each other if they are actually very, very different things that perform well in very, very different macroeconomic environments. For those among you who are more visual learners, have a look at this graph. This is a graph of TLT and GLD. What is TLT, you may ask? TLT is a basket, it's the largest basket in the world of US government debt of a long duration, I think 20 years plus. I think the average maturity is 26 years, and I think the duration is actually a little over 19 and a half. The point is, it is a basket of US government bonds, right? So these are things that are going to do very, very badly in a high inflationary environment for the reasons I just alluded to. And the other price series is actually GLD, and as implied by the ticker, that's a basket of gold bullion. So it is just a pile of gold. You would assume that these things would be decoupled in periods over the last 5 years when inflation fears were on the rise. You would expect that gold would rise in price and TLT would plummet in price. And conversely, if we thought that deflation was going to be a thing, TLT should spike in price and gold should do moderately badly in that environment. Turns out though that actually these things have walked hand in hand quite nicely together over the last 5 years. And because I'm that kind of data-driven nerd, I actually ran a correlation analysis on the two and found a very strong positive relationship between the price of gold and the price of TLT. The R value I think is about 0.905, 906 I want to say. Either way, it's a really, really tight correlation. Here's my thinking. If there's going to be a high inflationary environment, TLT will plummet in price. And in that circumstance, gold will rise in price. And that hasn't happened. And so therefore, because these things are coupled, you would assume, actually based on this, that gold is actually a great hedge against deflation and not inflation. Or at the very least, it should get you to question this thesis that gold is a hedge against inflation. This is the second chapter. I know it's been 7 years, but I pointed out 7 years ago that gold is a terrible hedge against inflation. And over the last 5 years, because gold and TLT have moved so tightly together, it seems that the relationship between gold and inflation is at the very least ambiguous. And therefore, I think people should actually push back against this idea that gold is a great hedge against inflation. So why is the idea that gold is not a great inflation hedge important, right? I think it's important because it speaks to a broader problem. Namely that there are these really, really smart sounding people with these compelling sounding narratives that are out there harming retail investors. And that really, really bothers me. I know I sound pretty lighthearted. I like to joke around a lot, and I actually do. But one of the things that really, really irritates me is the small mom and pop investor getting screwed by investment advisors or institutional money managers who don't really know what they're doing, or actually they have some other agenda, or they've got these weird biases, or they're operating by according to these weird old wives' tales, and that's really, really troublesome to me. And so my message to you, dear small retail investor, is question the premise undergirding every thing you hear from an investment advisor, because I know from firsthand, from my experience in the business, investment advisors have an agenda that may actually not line up perfectly with yours. And so when they tell you something, question it aggressively. For instance, if someone says to you, there's massive money printing out there right now, look into it, because it actually may not be the case that there's massive money printing. There actually may just be massive increases in bank reserves. And if banks aren't lending, because banks are the only source of money, commercial banks are the source of the vast majority of money out there, that actually may not be the same thing as money printing. And it actually may not be the case that gold is a great hedge against any inevitable inflation in case there is massive money printing. So question it all the way down, because we don't actually have very long lives, and we don't have especially long investing lives to save for our retirement. And we don't have 5 years to waste to listen to someone like Peter Schiff saying, oh, inflation's coming around the bend. Oh, it's just about, it's about to happen. So buy gold. Like all this nonsense, all this capital tied up in this ridiculous thesis that's actually doing them a disservice, because it's creating massive opportunity cost for them, and they're missing other massive opportunities because they're listening to this ridiculous sort of faith-based claim. And so it does irritate me, and I'm saying this to you now, 7 years later. Gold is not a great hedge against inflation, and I'm saying it to you to try to sort of like shake you out of a stupor and get you to start questioning these suits who are actually running your capital, because they may not always be doing a good job. So that's it. That's why it's important. On that light note, that about does her. That about wraps her up. As usual, this video was not to solicit any kind of trade or make an investment recommendation to you. I don't know you. I don't know who you are. You being the little Zeiss lens there and the giant retina scalding light that's in my face right now. This thing was for informational and entertainment purposes only. If it was informative to you or for you, I'm happy about that. If it was a source of entertainment for you, again, I feel sorry for you, because there are much more entertaining sources of material content out there. I would recommend anything with Jussie Smollett in it. He's been an immense source of entertainment for years for me. Anything with Brie Larson. She's a great actor, great thespian, very charming person too, I think. So yeah, check those guys out. Anything with Brie Larson or Jussie Smollett, far more entertaining than me. That's pretty much it. As usual, thank you very much for watching. Goodbye.
Birds come and cry there, and twitter in the tree.